As Trump's tariffs rattle global trade, bonds and oil barrels, how exposed is Nigeria's economic wallet to this seismic shock? Good morning and welcome to another power-packed episode of Business Week. The world's trading floor is on fire. China just slapped 125% levies on U.S. goods in retaliation to Trump's Liberation Day tariffs, while South Korea rolls out a $2 billion bailout for its embattled car makers. Crude oil has now slipped to its lowest level in 4 years, triggering market panic from Houston to Hangzhou. And Nigeria's Dangote refinery is offering a rare relief with a petrol price slash to 865 naira per litre. Meanwhile, the U.S. isn't mincing words, calling out Nigeria's import bans as one of the world's most damaging trade barriers. And in Zimbabwe, the government is issuing new bonds to compensate ex-farmers, just as the IMF warns of looming surges in African bailout requests. Well, if you missed all the big business stories and what happened on the trading floors during the week, don't worry, I've got you covered. I'm Rolake Akinkunbi-Filani. Yes, always we start with global energy commodities. No surprises there. It was all red for commodities. Week-on-week change. Brent was down week-on-week by 2.44%. $63.68 barrel closing on Friday. But during the week, we saw it at literally $60 a barrel. No surprises there. The Energy Information Administration has actually revised its global energy demand forecast. Of course, tariffs are the big driver for the market right now. WTI crude was also down by 2.09%. And look at that, natural gas down by a whopping 10.59% week on week, with RBOB gasoline down by 3.92%. Let's take a look at equities markets around the world. The Nigeria Stock Exchange All-Share Index closed Friday at 104,563.34 points, down by 0.9% from the previous Friday. Deal volumes also down by 5.71% week on week, but deal values down, number of deals actually, and the volumes traded was up actually, but the value was also up to boot at 24.69, with equity capital market capitalization down by 0.67% week on week. Let's take a look at Africa. Africa was a mixed picture. The big one here was Nairobi, as well as Casablanca. Kenya really facing headwinds as a result of the U.S. pullback in aid. We'll talk about that a bit later. But Joburg and Accra held up pretty reasonably well. Now to my top picks from around the world. And the first story on the top picks will be what we all probably know already, that China has retaliated against Trump's Liberation Day tariffs. China has hiked tariffs on U.S. goods to 125% following the Trump move earlier during the week. Although, yes, the Trump administration did pause tariffs for other countries around the world for 90 days, it exempted China from the tariff pause. So we know that this really is a battle of U.S. and China in terms of their relations. And the Chinese Minister for Finance has lodged a formal complaint on behalf of the Chinese government with the World Trade Organization. No surprises there. How long will this battle continue? We shall see. The issue is really impacting global markets, financial markets, capital markets, stocks and bonds. U.S. Treasury yields, 10-year Treasury yields have been up. We'll talk about that in a bit more detail. South Korea has unveiled a $2 billion emergency bailout package for its auto manufacturers, who have been in the eye of the storm in the Far East as a result of these Trump tariffs on South Korean car manufacturers and car parts makers. Now, the South Korean government hasn't reciprocated this tariff hike, still watching very closely what this will mean. But in addition to the bailout package, it's also looking at a financing package, reducing interest rates for car manufacturers and auto part makers, and also looking at reducing taxes and increasing subsidies to its manufacturers in South Korea. How sustainable is this? $2 billion bailout package doesn't sound a lot, because I think we're in it for the long haul with these tariff tensions around the world. Now, in Zimbabwe, the government has started to make compensation payments to farmers. Around 4,000 farmers were affected by the, in quote, land grab that happened in Zimbabwe under the late former President Mugabe back in 2000. Back then, there was an agreement that a $3.5 billion compensation package would be made to white farmers whose lands were grabbed. Under that dispensation. Now, the money has started to trickle out. In the first batch of compensation payments, almost 400 farmers have received a total of $3.5 million. That's $3.5 million for almost 400 farmers, but still quite a bit to go there in terms of the compensation payments. Of course, some people have described this as an unsustainable tick box exercise. We shall see how unsustainable it is. And given where Zimbabwe is heading economically with the currency headwinds, high inflation, high interest rates, this would constitute a strain, I would guess, on the Zimbabwean government's coffers. And so the question of sustainability of these payments and whether the full cycle of compensation of $3.5 billion will be completed remains to be seen. The IMF is predicting a surge in borrowing requests from African sovereigns to it as amidst the pullback in US aid. Many countries have suffered as a result, but some countries have fared better and some fared worse than others. Notably, Kenya, for instance, is looking at approaching the IMF again for a loan bailout package, if you like. The cuts, US aid cuts, have actually impacted the fiscal outlook for some African governments and in some cases worsened the budget deficits. But on the contrary, Fitch, the global credit ratings agencies, has said that many African countries will be able to absorb the aid cuts and trade tariffs, the trade strains. It has singled out a few countries who may be a bit more challenged, such as Ethiopia. 80% of Ethiopia's FX reserves are underpinned by aid from the US. And so Fitch has said countries like that, Ethiopia, it's mentioned Ethiopia, Uganda, Lesotho, may be adversely affected compared to, say, Ivory Coast, South Africa, Nigeria, Namibia, and it cited ongoing economic reforms in those economies, which should help cushion the impact of the US pullback in aid. Interestingly, the IMF has actually said that sub-Saharan Africa exports about $23 billion worth, $29 billion worth of goods, exported $29 billion worth of goods to the US market in 2024. So the US market was sub-Saharan Africa's largest trade partner after China, the UAE, and India. So we do expect to see some impact. But the mixed picture across the continent suggests that others will do better compared to some of those other countries that I mentioned earlier. So we're going to be talking a lot about trade tariffs, global financial markets, financial shocks, equities and bonds in a very short while. So that's it for my top picks for the week. And now for some other top stories from around the world. Tariffs. With the implementation of President Trump's historic tariffs on international imports entering the US on Wednesday, a global economic order has largely endured for centuries. Was upended. That's according to the Financial Times. And China and Europe are expected to continue to respond with retaliation. According to the report, the most immediate response from investors came in the market for government bonds. Contrary to the goals of the Trump administration, borrowing costs in the US began to climb immediately after the tariffs came into effect. An unexpected move that, combined with falling stock prices, caused some analysts to raise the prospect of broader financial instability. Well, still on that note, amid the global trade war and growing recession fears, crude oil prices dropped for the fourth straight trading day during the week, reaching their lowest levels in 4 years. Now that President Trump's broad reciprocal tariffs have taken effect, China, the biggest oil importer in the world, is subject to import penalties of 104%. Now, Brent oil futures have fallen more than 19% to $60 per barrel at some point during the week, almost trailing well below 60. And West Texas Intermediate futures also fell 20% to around $57.06 per barrel, both of which were at their lowest levels since 2021. In response to complaints from technology companies that its laws are too onerous, the European Union on Wednesday unveiled a strategy to strengthen its artificial intelligence sector and assist in it more aggressively competing with the US and China. In a press statement, the European Commission, the EU's executive branch, described its Artificial Intelligence Continent Action Plan, which seeks to transform Europe's strong traditional industries and its exceptional talent pool into powerful engines of AI innovation and acceleration. The US has criticized Nigeria's ongoing ban on a broad variety of imported items, calling it a significant trade restriction that hinders US exports and exacerbates economic tensions between the two nations. Nigeria's import limitations were recently named by the Office of the US Trade Representative as one of the top 10 unfair trade practices that American exporters worldwide must deal with. 25 product categories are impacted by the restriction, including important US export interests like fruit juice, alcoholic drinks, pharmaceuticals, meat, poultry, and pigs. It's worth bearing in mind that the AGOA trade agreement that the US had for African nations is coming to an end, and it remains to be seen whether that will be renewed and whether African goods will also have export access to US markets. So it depends on which side of the pond you sit on that debate. Now, on to other news. Kenya has been encouraged to back South Africa's candidate for the Africa Development Bank presidency, Swazi Shabalala. Musalia Mudavadi, Kenya's Cabinet Secretary for Foreign Affairs, met with Shabalala over the weekend and formally requested support, according to Mudavadi's office, which did not disclose Kenya's stance. For the position of the head of the only African financial institution to receive AAA ratings from all three of the world's ratings agencies, Shabalala, a former senior vice president of the Africa Development Bank, is competing against 4 other applicants. She is the sole applicant who is female. Nigeria recorded a $6.83 billion balance of payments surplus in 2024, reversing deficits from the previous 2 years. That's according to the Central Bank of Nigeria. The turnaround was driven by a $13.17 billion trade surplus, strong remittance inflows, and increased portfolio investments. Foreign reserves rose by $6 billion to $40.19 billion, while net errors and omissions dropped sharply, reflecting improved data integrity. The CBN also said the surplus underscores the success of ongoing reforms and stronger investor confidence. Well, that's it for our top stories from around the world for now.